Welcome to XM.com. For this Forex Preview video, we'll be having a look at the upcoming U.S. data this week and the outlook for the dollar. I'm Cristina Marujos. With me today is Senior Investment Analyst Marios Hadjikyriacos. Wednesday now is likely to be very interesting for investors, Marios, with the latest Fed minutes being released ahead of the retail sales figures for January, even though the Fed minutes might be a little outdated as markets are pricing in hawkish moves by the Fed and 6.5 rate hikes for this year. Retail sales might be more revealing to the state of the economy. Therefore, what are we likely to see in the numbers?
Hello, Christina. I think you are absolutely correct. Even though the minutes usually attract more market attention, I think they are going to be outdated this time because these minutes refer to the January meeting. Now, this meeting took place before the latest jobs report, where wage growth, of course, accelerated, and before the latest inflation numbers that also exceeded expectations. So any sort of signals that we get in the minutes are going to be a little bit outdated, and the argument for tightening monetary policy quickly has only become stronger since that meeting. Instead, I think the real signal could be the retail sales report. Retail sales fell in December. We're expecting a bounce back in January, and it's really going to be crucial. How is the consumer doing? Can the consumer sustain aggressive rate increases? And I think the more revealing aspect data will be how the dollar reacts, because recently we've seen the dollar unable to capitalize on strong data. After the last jobs report that was pretty strong, after the latest inflation report, the dollar didn't really rally powerfully after those data, and that is a worrisome signal, and I'll be looking very closely in the retail sales numbers. So, for example, if the report is solid again, but the dollar can capitalize, that might be a signal that the upturn in the dollar is becoming exhausted.
And speaking of the dollar, we saw a flight to safety earlier this week with the situation in Ukraine approaching boiling point, on which the dollar, of course, gained. Could geopolitics overshadow the data this week?
I think that's a very good bet. So let's take a small step back. We had a huge inflation surprise last week. The dollar didn't really advance after that, but it did rally after fears emerged about armed conflict in Ukraine. And that, of course, sparked a lot of defensive flows, let's say, as investors went into the safety of the reserve currency. So yes, geopolitics are really important in the near term. Well, it's really a very fluid situation around Ukraine. I don't think anyone can predict it right now. But it's fair to say that a lot of the fear has already been priced in. So if war is ultimately avoided, that would actually be perhaps a negative development for the dollar as the safe haven demand fades a little bit. Now, I'm starting to see signs that the bigger picture is starting to turn. Let's take a step back. The markets right now are pricing in 6.5 rate increases by the Fed this year. I think we can go up to 7. So even though the Fed in reality might hike fewer times, I think that the markets can still price in the 7th rate increase. And of course, we've got this really unstable environment for stocks, which is positive for the dollar. In the bigger picture, I'm starting to get a little bit worried, and I think that the overall uptrend is approaching its final stages. Now, why is that? I think the Fed is fully priced here, right? I doubt we're going to get 6 or 7 rate increases this year. I can imagine a scenario of 4 rate increases or perhaps 5 being a little more realistic. And I believe that the markets are going to price out some of these aggressive Fed bets after inflation peaks. And that might actually happen relatively soon over the coming months. Maybe it's March, maybe it's April. And we've also got a lot of other factors. So the Democrats will probably lose Congress in November. The Fed is not playing solo anymore. We are seeing other central banks, like the European one, signal higher rates. So even though the near-term outlook for the dollar hasn't really changed, I'm starting to see signs that heading into the second half of the year, perhaps it might be a different story.
Marios, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.